Welcome, guys and gals. We are in a very interesting place in the market, and depending on where you are personally, you could either make a lot of money or potentially lose a lot of wealth. Guys like Patrick Bet-David and Graham Stephan have been talking about a concept recently known as the reverse market crash. So what is a reverse market crash? Well, it's when prices balloon upwards at a very fast rate. When that happens, you have a certain few who get very wealthy, and then you have the rest who are left behind. Think of a couple examples. You got the '01 tech crash, where a lot of companies went bust, but the few who survived went on to be billion and trillion dollar companies and some of the most valuable companies that we know today. You could then look at the housing crash in '08 when investors were able to gobble up properties undervalued and at low interest rates and ride that up over the last decade or so. And then the most recent is the 2020 pandemic, which we all just went through, where there was much market uncertainty, money was being printed, inflation was going up, and those who were able to buy assets capitalized while the rest of the world was left behind. Now, most people miss out on opportunities like this, but if you're smart, you won't let that happen to you this time. So let's talk about what's going on, what you need to watch out for, what mistakes people are making, and how to capitalize on the current market conditions. Now, if you take a quick second to like this video and subscribe to my channel, it'll help reverse the algorithm so we can help get this message out to more people. And then I'm also going to drop a link to my free real estate investing group down below if any of you guys are interested in joining. Now, we've all heard the saying, the rich get richer and the poor get poorer. And based on data, it's actually true. It's not just a folks tale. In fact, the middle class is decreasing at a very alarming rate. So in 1971 in the US, the middle class made up about 61% of the population. Fast forward to today in 2023, only 50% of the population is left at the middle class. And then just from 2022 to 2023, the last year, we have had a 7% drop from the middle class in the United States. And guys, that's the largest drop we've seen in the middle class since the recession in '08 and '09. So why does this happen? Well, there's a couple reasons, but one of the big reasons is the wealthy have disposable income. And so they take that disposable income and they invest it into assets. Assets appreciate over time, but they especially increase at crazy rates when inflation takes place. And so you have these wealthy folks who have disposable income, who put it into assets. It's going to go up in value at a steady rate over time, but then inflation hits and everything booms up very quickly. The wealthy's net worth grows extremely fast during those time periods. Whereas we look at the middle class, they don't have that disposable income. Or maybe they do have that disposable income, but they're addicted to spending money they don't have on things they don't need. And so now they've got it all into depreciating assets like their boats and their jacked up trucks and every other toy that they don't need, instead of putting it into appreciating assets. Lesson for another day. So when inflation hits and prices go up, guess what? The middle class do not have any assets to their name to get that big appreciation pop and to increase that wealth. Now, the ones who are smart, they do, and they go from what we call middle class to upper class, but statistically, not many folks are doing that. Unfortunately, the majority are losing wealth when that inflation hits because the price of everything has gone up so significantly, but because they don't have assets to cover that rising cost, now their income can't keep up with the price of goods, and they drop from middle class to lower middle class or even lower class. Now, the United States has done a pretty good job of managing this up to this point. Now, we've had times in history to where we really took a hit. Think back to the Great Depression in the 1930s. But overall, we've done a pretty decent job, and I'll dig into that more in a second. But there's a lot of countries that we can learn from to realize, why do these reverse crashes happen and what causes them? So Patrick Bet-David in his video gives an example of Germany after they lost World War I. They had to pay billions of dollars back in reparations. Well, they didn't have that money. So what did the government have to do? They had to print that money so that the country could survive. And so back in the day, it used to take 4 German marks, which is their currency, to equal $1 US. But after they printed all that money after World War I, which I think was around $10 billion, it then took 1 trillion marks to be equal to $1 US. We went from 4 marks to be equal to 1 to now 1 trillion. That's ridiculous. Buy your first or next real estate deal in the next 90 days guaranteed, or we'll continue coaching you until you do. That's my guarantee if you join my rental academy. I've stumbled upon a process that is so powerful that I can sit here today and say, you can come into my world and buy your first deal in the first 90 days. And if you don't, I'm going to keep coaching you until you do. What we've done in the Rental Academy is we've removed all the roadblocks for you. I've already chosen the market for you. You're going to have leads generated automatically. Myself and my team's going to work with you to analyze those leads. When you pull the trigger on a property that you want to buy and you need to fund it, we've got lenders in place. And after you've closed on it, if you need to rehab it, great. We've got contractors in place. And if you want to keep it as a rental, we've got property managers in place. So you come into our world, we plug you into a proven system, make it easy for you so you can have success in your real estate investing journey. If you're interested, you can go to cowboysacademy.com, or if you go down to the show notes of this episode, click the link that says Cowboys Rental Academy, and it will take you to your next steps there. If you've been struggling finding good real estate deals, I've got a solution for you. It's REI Call Center. REI Call Center has professionally trained and managed cold callers to help you scale your real estate business. I think they give you somewhere around like 1,500 cold calls per day. Their clients have closed around $10 million from the leads they brought in. They got close to 200 clients going right now, and they're really more than just cold callers. Yes, they have their team of professionals who are making their calls, but they have weekly trainings and Q&A calls for yourself. They have training videos. They've got Slack channels with dedicated people to make sure you're successful. They've got checklists, cheat sheets, you name it. They've got you covered to make sure you are successful in your real estate journey. Well, how does it all work? Well, step one, you're going to pull a targeted list working with them from PropStream so that you can target the certain locations that you want to start buying properties in. Second, they're going to use their Zen call platform to start calling 1,500 calls a day per cold caller. They're going to then upload all the leads into Asana. You have a view of them, and you can go attack and start buying the properties that you see that pique your interest without having to do any of the work. Look, I have worked a W-2 job while building my real estate portfolio. I've been raising a family the entire time, so I haven't had time to go and cold call myself. And that's where a company like REI Call Center comes into effect to be able to take that load off your plate so that you can generate leads, close more deals, and build that portfolio. We can reach out to them at reicallcenter.com, or if you go to the show notes of this episode, you will see a link that will take you directly to them. Graham Stephan tells a story about a college student in Germany during that time who went and bought a coffee for 5,000 marks, drank it, went back to get another coffee. By the time he got that second coffee 10 minutes later, it was 14,000 marks. That's how quick inflation was growing in Germany after World War I. Another example Graham brings up is Zimbabwe. Zimbabwe's political system exploited the people and printed trillions of dollars in the name of building military, helping infrastructure, producing food. But what they were doing is they were actually lying about how much money they were actually printing per month. They weren't reporting the correct amount. The people found out about it, and they lost trust in their government. And it was interesting, the government actually made inflation illegal to protect themselves. We could go down the list and look at other examples like Venezuela, who've been through this, Argentina, Iran. They've all had the same themes. Something happens where they have to print money. Politicians get greedy, take it to another level. Interest rates rise ridiculously because of inflation. People can't afford to live anymore. Trust is lost in the country leaders and economy. Now, as we are experiencing now, when inflation goes up, rates go up to try and curb inflation. So there's two ways we got to look at rates: nominal interest rates and real interest rates. Now, nominal rates are the rates that the Fed set. That controls the prices of everything else. Think of mortgages, your savings accounts, bonds. All of those rates are controlled by the nominal rates that the Federal Reserve sets in place in the United States. But then we have to look at what are the real rates of inflation. And to do that, we're going to take our nominal rates, subtract that from inflation, and that's going to give us our true rate of interest. And what's interesting here in the United States is when we look at history, rates really aren't that high compared to where they have been. I mean, we look in the 1970s, they got upwards of 20%. I would argue that where we were in 2019, 2020, the start of 2021 was actually very unhealthy. And at points, we've even had negative interest rates, which brings me to a very important point. Earlier, I told you that printing money, price control, political greed, loss of a positive outlook on leaders and economy are big key factors to a reverse market crash. But if we do a little bit more digging and look into the countries like Germany, Zimbabwe, Argentina, Iran, Venezuela, we will learn that negative interest rates have always been a common denominator in these reverse market crashes. When they have those negative rates, although their stock markets may boom and increase significantly, their purchasing power is trash, especially compared to the US dollar. And so the market's going up, these assets are going up, but their actual purchasing power with their currency is declining rapidly. So much so that they truly now only have upper class, who are folks who are invested in the 1% in those particular nations, and then everybody else has zero purchasing power. Because if you were not able to ride the waves of those inflationary periods with assets, then you were completely left behind. Now the question comes is, will we have to face this in the United States? I think we are to a degree. We can see that the cost of goods are going up, assets are going up, and the value of our dollar is going down. But when we look at it relative to what these other countries are going through, I don't think that we will experience what they have. Now, is it to say we never will? No, you don't know what the future holds, but as it stands today, we have policies, practices, governments, checks and balances in place that hopefully keep us from experiencing that large of a gap of wealth. While our politicians aren't necessarily the best people in the world and they have corrupt agendas, there are a lot of things in place to keep them from being able to take control and absolutely ruin an economy compared to these countries that we talked about, where a dictator comes in, where a powerful family comes in, and there's really nobody to hold them accountable, and they're able to do whatever they want for their personal gain at the expense of their entire population. And not to mention the constant wars that have been going on in many of these countries that I listed. And so, no, I don't think it's going to happen to the extent in the United States where we essentially become a third world country financially, where we have a small portion of 1%ers and everybody else is left out on the streets. But we do have it enough to where it can impact your life financially. And that can be either good or bad, depending on what you decide to do moving forward. So what can you do personally to prepare yourself for a scenario like this? Well, number one is you can save more than you spend. That's basic handling your money 101. Let's put together a budget. Let's know how much we have coming in, how much is going out, reduce the amount of expenses that we have, increase the amount of income, get that disposable capital up, and then start investing that into assets such as real estate. If and when you do this, you're going to put yourself in a position to build wealth over time, but then also capitalize on the huge spikes of inflation when the rest of America, who doesn't know how to handle their money and put it in the right places, is hurting. When times get rough, don't panic sell. Don't look at it as doom and gloom. Look at it as an opportunity, because you know, based on the cycles, that eventually we're going to hit another reverse market crash, which is going to send assets soaring at a ridiculous amount again. And guess what? Your wealth is only going to compound, and moving forward, no matter what situation the market's in, you know that you're going to be able to take advantage and come out a winner on top. As always, guys, if you appreciate the videos, please subscribe to the channel. Take time out of your day to like this video. It'll take you 2 seconds. And if you want to learn more how to invest in real estate, join my Burr Real Estate Investor Group. The link's down in the show notes. I'll see you next time.